Good afternoon. Today, on the 26th of June, I have a presentation for Bank Negara Malaysia concern on the two issues, which is compression of loan, compression submission, and then the other one is the price transparency of the selling price of the developer. So I like to do a presentation on this topic. Let us go in. Recently, Bank Negara Malaysia and the Association of Banks of Malaysia (ABM), they have communicated to REHDA two financing issues pertinent to the housing industry. So REHDA is actually the Real Estate Housing Developers Association. So this is like a association of all the housing developers in Malaysia, mainly in the West Malaysia. Then this association with the members who are developers, they were given these two statements to pay attention to. So these issues pertinent to housing industry. So in fact, one of course we heard of is loan compression. I read it out from the slide. Loan compression, whereby purchasers apply loans for multiple units with various banks, but make the declaration that the purchase was for only one the same unit. So in straightforward manner, meaning in fact one purchase becomes multiple purchase, and in fact to the individual bank, they thought that they were the only bank giving out the loan for this person. So in fact this person multiply himself like a photostat copy. So he actually has made purchase of more than one unit. So that means the banks are in fact cheated. So similarly, the second issue is on the transparency of selling price declared by the developers, in which the sales and purchase agreement must reflect the net price of the property after considering rebates and discount offered by the developers. This has got some interesting background on transparency of selling price. So this one I like to just mention a few more things. Because the recent issue on actually the liquidated ascertained damage when they calculate delay of project completion, again because of a lot of issue due to COVID-19, a lot of projects could not deliver on time. Therefore this thing came about, and actually delay in certain way also happened before, and then there was an earlier court case saying that the calculation of the liquidated ascertained damage would be using agreement. The discounted price should be the correct price in the sales and purchase agreement, but it is not so, and we all understand that this particular fact of a lot of purchase has been made by using the selling price, which is the developer selling price, but the developer left, right and center give away rebates equivalent of 15% of the discount given and the rebate given, and it is not reflected in the sales and purchase agreement. So when this sales and purchase agreement price goes to the bank actually loan out based on this particular higher price, and therefore the bank in fact take out more money to finance this purchase rather than the discounted price. So this become the risk for the bank, and therefore the bank has issued statement to all the developers that being ethical, you should actually reflect the correct pricing, which is the discounted price. On this issue, there are a lot of viewpoint, and a lot of time if you speak to a developer agent or you speak to a developer marketing agent, they would say that this has been in practice for many years, and then the industry in fact need to have or sustain itself with this type of system, whereby the bank is supposed to come out with the money and take all the risks, whereby only then the developer can sell their their housing products. And indeed, over time, this ironically has become a practice that the developer come up with all the means and ways to spread the payment and the repayment. In fact, even giving out cash rebate to purchasers to entice them to uh, take loan from the bank and buy the property. So there are a lot of different viewpoint, and I do not think that it is for me to comment. Generally, there are two aspects of it. One is survival and sales of the property, and therefore short-term ability to liquidate and get the money for the selling of the property and to sustain business. On the second aspect is the infrastructure, long-term architecture of the loan. So financial institution like Bank Negara will have to shoulder this particular risk, whereby they need to in fact stretch the credit to loan out more money in the sustaining of the business, the market, to purchaser, so that the purchaser keep on continuing buying while the property market can sustain over time. So hot issue Bank Negara Malaysia. I'm Thomas Sim. Today is 26th of June 2020. So in this topic, in fact, our discussion point will be on the issue of what price is the price, and then what is the issue of transparency of selling price, which is the topic of discussion this afternoon. Right. Before we go into detail, we need to understand the concept that price and benefit and cost and value, these are the terms that is commonly confused. One issue which is when buyers look at the property, they look at it from the point of price, and then the issue of benefits. But when the loans is being dispersed, then the loans needs to based on the actual value, which is from the valuer aspect, the valuation report. This is in particular for subsale or secondary property. So comparing like to like is very much blur, in the sense that in the market, when we talk to client and talk to maybe purchasers, to them they will not really be concerned about the value, but they are more concerned about how much is the down payment, what is the price, listed price of the property. But from the point of the bank, of course they go in more depth and in more detail. They actually worried that if there is any reason that the loan is being defaulted, then what is the exact setback and the downward trend for the price to go down, which is protected by the value. If there is a good value of the property, then the bank would be protected in terms of its credit given out. So this part in a sense is terminology, as well as in the aspect of discussion to look into whichever like to like, comparing price to price, comparing value to value, rather than getting confused and argue over what is the correct way on understanding this topic. And indeed, I would like to disclaim that a lot of my maybe discussion would not be pleasant or would not be nice to hear to a lot of property investor or agent out there, for the fact that for developer agents as well as the beneficiary of the sales, well, as long as a deal is made, they are not so worried about whether the value is the correct value or the price is the correct price. For the people who are benefiting from the process of dealing, it is the commission and the profit margin rather than whether the purchaser eventually actually pay the loan or the bank actually go with non-performing loan. That is not their concern in the immediate closing of the deal. So that's why this Bank Negara Malaysia issue on this transparency of pricing or selling price, in fact, is a topic that we should not be too emotional about it in terms of closing a deal, making us difficult to close deal. Rather, it is something which is structural in the financial architecture of the country, of the nation, in safeguarding the ability of the loan repayment and also for controlling the speculative market in terms of property pricing and also property risk. So let us go in with a scenario. Let's say you have this scenario on the left. A person whose son or kid go to buy a handphone from a shop. So there is of course a pretty sales assistant, and then maybe a nice handphone shop even would serve you drinks and food. So the father eventually paid 1,000 ringgit for this particular handphone, and then when they actually come back and then they check with their friends and go online, and actually they found out that the listing price, the retail pricing for the handphone is only 900 ringgit. So of course they are angry, so they are buying at 100 ringgit more. So a lot of this type of situation happen when in area of no regulated pricing. That means you can buy a similar product from different places at different pricing, because there is a free market and people compete for the sales of certain margin, and then depending on the fixed cost of the operation of the business, then this retail pricing fluctuates. So of course the issue is that whether a pretty shop assistant who is getting highly paid with the promotional incentive on giving out drinks and food is ethical or not in business. Of course, in this scenario, if it is widely practiced, then from the aspect of business ethics, well, it may be accepted as a norm. So sometimes cultural as well as local setting may be the ingrained way that things are done. So therefore, it's quite a blur area to go in. And also it depends on whether this particular item is of any maybe concern, like, well, if it is a medical vaccine, it's a vaccine for COVID, then all these issue will be highlighted more than just if it is a maybe a weight loss drug, weight loss medicine, which is a lifestyle medicine. So of course for handphone, which is a lifestyle thing, adding on incentive and gimmicks in the promotion or marketing of the product may be a so-called strategy by the business. So a lot of time government or regulatory body may not want to get too serious about this. Of course, the father will say, well, stupid son, you actually bought it at higher price. And then the son would say, well, I prefer to have a better environment of shopping. I don't want to buy this thing online where I want to actually touch the units in the shop rather than waiting at home, and then when the handphone arrives online, which is online purchase, that I do not have that assistant to help me, or a nice environment to do shopping. So all these are personal choice, and of course if it is 1,000 ringgit or 100 ringgit item, maybe that will not be too much of a concern because the difference is understandable. But when you look at on the right hand side, when the similar son goes to the developer's sales gallery, and the developer actually gives these similar services, and then the father paid actually 1 million for a penthouse, and later on found out that actually you can get it at 900,000 instead. That means there is 100,000 difference. And this, of course, the developer will say, well, I'll give you a rebate of 10%, which is very good deal. So in fact, the developer in the throw in food and drinks and also pretty shop assistant with a good service at the same time and giving a rebate of 10%. What is more better than this gift from the developer? One would ask. But if you look at it from the aspect of the son goes to buy a handphone from the shop, and then the money actually is not from the father. The father had to borrow money from an uncle. And for the similar scenario, when this rebate of 10% of 900,000, actually the father borrowed money from Bank Negara. So Bank Negara and this uncle would be actually dragged in to this scenario that, well, should there be a certain guideline in terms of how to actually loan this money. So therefore, the risk of repayment to the uncle and also the risk of repayment to the bank by the borrower, in fact, the issue whereby is the price with 1 million or 900,000, which is a more transparent price. So therefore, in a way, what the Bank Negara Malaysia wants is the property developer strike out all these extra services and strike out all these rebates, but then sell it at 900,000 instead of selling it at 1 million. So in the same scenario, the handphone shop should actually take out all these gimmicks and then the father pays 900 ringgit, which is the correct retail price. But then again, it's not so simple because it is not a business model maybe for this shop which sells handphone with the sub segment of the market who like to go and touch and operate the phone rather than buying it from any online portal. So this is a scenario for business as in strategy as well as in the survival of the business choice. Therefore, what actually happens is, in fact, if you look at the 900,000 down payment now is imposed on top of the 900,000 for the fact that what the bank wants is that the father who actually bought it at 900,000 has to come out with 90,000, which is 10% cash down payment. And the reason for this is that the bank doesn't want that the father actually take the whole loan, which is the 900,000, for the fact that the bank would want to reduce its risk, the risk of repayment, because the father instead having to repay less now with the 90,000 cash down payment. So this is not what is seen in the market, because in the market the father or a lot of the purchaser would not be able to come out with cash of 90,000. So therefore, what the Bank Negara system wants is not what a lot of people on the ground on the condition of cash tight being able to afford. Therefore, the developer cannot sell property only a very small amount of segment of population having this amount of cash. And therefore, what they want is the bank loan of 900,000, the total 100% of the retail price of the property, and bank would take all the risk. So in this scenario, the bank actually had to increase its risk. And this is seen as what bank taking more risk, because if let's say the same property in fact over time increase in value so let's say this year it was sold at 900,000, and then next year just beginning of the year so being that the market is so good, then there is a 5% price increase. So the subsequent sales of the house of the similar unit by the developer would be 945,000, and then as the purchase was done before the 5% increment, then therefore the loan at 900,000 is well protected, because the next building or the next unit actually worth more than the loan. So the bank is quite well protected in the sense that, well, if the bank were to sell this particular unit, then it would be likely able to sell it at 900,000 to get back the loan. However, if they market goes down and then the property goes down by 5%, that means the developer had no choice because unable to sell at 900,000, will have to sell at a discount of 855,000 at a 5% discount. So in this scenario, then the bank would be actually unable to get back the 900,000. So the risk actually shifted from the purchaser to the bank. So the bank having this issue would see it as a disadvantage to offer a total 100% loan. Of course, in such a way, by reducing it to 90% or much less for higher risk property, then the bank is able to maybe secure its position to safeguard its credit repayment. Of course, if you take this scenario as in the case that when the loan was dispersed at only 90% of the 900,000, so that means 900,000 take away 90,000, which is 810,000. So if the price were to increase by 5%, then of course it is still much better for the bank in the position of 810,000 loan. However, if the market is to go down at another 5%, then it is still well protected because the value of the property is 855,000 and is still way above the 810,000 loan which the bank has given away. So in such a manner, of course, the bank would protect its interests in the sense that it will not deliver a 100% loan for a property which is hyperinflated or a property that has inflated in its value. So this is a situation of what is happening in downward market, whereby over the few years, then prices has come down. Developers are launching newer project at a cheaper price. Then the older item, older stock is actually held up by some of the investor, which owe money much more than what the market is now. So this makes it difficult for the investor to continue repayment of the loan because it is to the investor negative business. And in such a manner, in the fact that if you amplify the situation, that this particular 5% goes down to 15%, then or 20%, then the price of the property may actually go down below the loan value. So such a manner, then the bank cannot get back its money. So such a situation can happen in countries where hyperinflation and hyper speculation, whereby the property has gone up a lot and the bank is loaning too much to the market and therefore unable to recover its repayment. This is a scenario whereby if you look at different types of properties and different types of use, then commercial property, land, and residential property, their risks are different. So for the fact that there is higher margin for residential property to loan up to 90%, in fact, the Bank Negara ruling now actually for the third property, you can still go up to 90% for the Penjana, recent Penjana announcement. So that means residential property, the risk for the bank is actually lesser because it is some shelter for families and people would not likely default on the payment. Whereas for property like commercial property, it may be only up to 80% or 70% for the loan margin. The reason simply because the risk is much higher. Commercial property may appreciate in price or speculatively appreciate in price in a short period of time, and therefore the bank is worried that they overstretch its risk limit, that the eventual in an eventual inability to service the repayment of the loan, the bank cannot get back its loan. And therefore for land and also some agricultural situation, then it would be even worse than 70%, because the fact that the land in fact doesn't produce any value. So sometimes the situation of a vacant land in a difficult accessible area, it would not be able to generate any income. So therefore, the risk is a lot higher than commercial property, and definitely even more risk than the residential property. So that means people who has no down payment, they cannot do anything. The question about no down payment and no talk, in fact, it is not true, because the government, if in a way, to help the lower income bracket by doing the Perumahan Rakyat and the Prima. All these government projects, in fact, the loan can be up to 100%. The reason being that there is very little risk, because these houses are actually at a medium or lower than medium range of pricing, and likely it would have 100% repayment, because the screening of the purchaser is very strict, and therefore like for example, only when you are buying your first property you can buy Prima or Perumahan Rakyat, whereas for normal sub-sale and normal project sale, a lot of speculating is been buying these houses because they are hoping to buy and later on flip the property. So these are entirely different market segment. So for the government driven types of projects, there is always 100% loan from the bank, and the banks are partner to some of these projects. Similarly, of course, there are people who say that, well, it doesn't mean that you need to buy now. You can actually rent, and then later on, well, when you have enough money, then only you buy. So it's like a old Chinese way whereby you don't go and buy a car until and unless you actually save enough money. And a lot of this Chinese old thinking is in fact buying at cash and get a very good discount. So these are the way that delay gratitude would in fact get a good buy. However, the current market or current human scenario in property is not like this. People want to make money quick, and people want to have enjoyment rather than going in the delay gratitude manner. So like I said, the ugly side of human, developer would want to increase their ability to faster sales, bigger earning, and then the buyer and the purchaser of the houses from the developer wants it to be a quick, big houses, faster to get, and then they can have a good open house party, and then they don't mind getting a big credit and long term to pay. Some of them actually wanting to minimize the money repayment as long as possible, although the interest amount is actually upon paying up is actually double price of the price of the house. So these are, well, the recent manner of how our society behave. And lastly, the bankers in fact trying to make this developer and the buyer happy. They're taking higher risk, and then of course the bank officer would have a bigger target because of the fact that every year there should be increase in target, and every year the bank loan to disperse out should be more, so that they can in fact achieve target and get their own bonus. So my presentation hopefully could explain some of the issue on what happened with the REHDA issuing out these two concerns, the compression of loan and also the transparency of selling price in the sales and purchase agreement. And thank you for following this video. I'm Thomas Sim. I can be contactable at the number as displayed, and kindly visit my website when you are free. Thank you very much.